Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Wednesday, June 11th, 2025, beginning with our headline CPI Cool. From March to April, prices of stuff for consumers rose by 0.2%. It was expected from April to May to be the same, and instead it was only up 0.1%. And when you exclude the volatile food and energy to get a more clear picture in the core, the expectation was to actually go up by 0.3% and only went up by 0.1%. Markets had been expecting higher inflation in May than the actual numbers. Onto the community topics. I made a new short. I made a new macro update reading through my whole website for the first time. So if you're unfamiliar with my work, I recommend checking that out. Other than that, no other community topics other than what moves, if any, did you make today? Did you buy anything? Did you sell anything? I nibbled on UVXY puts that actually expire on Friday, strike price 25. Mostly because we do have the jobless claims coming out Thursday, and we've been suspiciously high. It's a complete gamble, but why not have a little bit of fun with money that I can lose comfortably and still sleep at night? So just nibbled on it a little bit. Coming up tomorrow is really the most important day of this week. We have PPI, the producer side of inflation. How much are the producers paying for the stuff that they're selling to the consumers? We also have the jobless initial claims and continued claims, and a 30-year bond auction that a lot of eyes are on of $22 billion of U.S. debt being sold. I'm hearing a lot of people think that it's going to be weak. Not me. I think it's going to be a very strong auction, and we'll see. Remember, I'm just a guy with a crystal ball. Coming up, we also always have continuous tariff updates. The latest is supposedly the rare earth deal with China is all set, and we're sort of back to square one more than anything is what I'm getting out of the news. Also, federal budget updates still forthcoming. As always, thank you for watching, subscribing, commenting, and supporting the subscription. It's right there, just that button. You put your mouse over it and then click. I did update my daily reminders and macro views website that you can read. You can also see my new video on it. I also dressed it up with a few more fancy emojis for this screen. And no changes to the crystal ball readings nor the Robschild portfolio besides that small put position I talked about. And also added some cool emojis, because why not? It's 2025 and Robschild is upgrading with the times. Onto the chart, starting with the S&P 500, the SPX. It just closed. It's 401 as of the recording. So yeah, we did drop by 0.27%. Earlier we were up on the day. I think Mr. Market's really, there's a lot of really important stuff coming out tomorrow. So more than anything, the whole market, from my perspective, is sort of just sitting on its hands. TLT, my favorite place to be, got a little bit of a bid to go today, going up by 0.3%. This market is obviously waiting in heavy anticipation of the bond auction tomorrow. It does have the potential to make TLT go way up or way down. I mentioned in yesterday's show, crude oil makes me nervous. After all, unemployment can follow the price of crude oil, and with today's large move up by 4.56%, it's not a good sign for the labor market in my estimation. Although I am hearing professional traders shorting around this level, expecting oil to go back down, especially in light of what's going on with OPEC and production. The Middle East companies do not want Americans to start drilling for oil because it would reduce their market share. They don't want that. So in my opinion, oil will stay down here. Dr. Copper with a PhD in economics, closing on this previously drawn support line that I had before. It looks to me like it's sort of itching to break down out of this wedge, and psychologically, we're not going to get some support until around $468. And if that doesn't hold up psychologically, we might be headed to new lows, maybe even below $4. But that's just a crystal ball reading. Another chart catching my eye today was the Russell 2000 IWM ETF dropping 0.4%, engulfing yesterday's little doji candle. I said yesterday it sort of looks like little puffs of smoke that could easily reverse to the downside, and it looks like that might be occurring. Again, a lot sort of depends on the data coming out tomorrow. It's a lot of data. The bond auction is huge. The PPI is huge. The initial jobless claim, continued claims for right now, for where we are in the cycle, is huge. So hold on to your hats for tomorrow. The last chart I want to bring up is just a reminder more than anything important in these times to realize what the 10-year break-even inflation rate is doing, and it's dropping here. It's not going up. So for people that keep thinking, oh, the tariffs, it's going to cause this like spike in inflation, we don't know how that's going to affect things. Well, it's dropping right now. We, like I keep saying, longer term, we've been, ever since April, we haven't been finding new highs in the 10-year. If we really were actually worried about inflation going higher, the bond market would be pricing this. It's betting on it. If you know anything about betting markets, they're better at predicting presidential election outcomes of lots of things, because money's involved. And when money's involved, people tend to get smart with their money. And right now, the market is not betting on inflation. This is trending lower. The most interesting thing about today is really tomorrow. We're kind of sitting on our hands. I'm on the edge of my seat, waiting for this data to come out tomorrow morning. Should be wild. I expect things to get pretty wild tomorrow. But what do I know? I'm just a guy with a crystal ball, and that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.